Jason, energy. You sold energy.
I know.
My love.
Brian, I know.
I'm not saying you're my love, but the energy's my love. But you could be.
Yeah. So, I mean, we had a small position in XLE. Commodities, commodities have been doing well outside of oil, right? Crude's down 10.5% over the last month. The XLE is down 6.2% over the last month. And for me, obviously in that ETF, 40% of the exposure is in ExxonMobil and Chevron. If you're going to be there, I think the fully integrated names are the ones to play. But I just think it's a little early for energy right now. I see, obviously, what's going on with China. We'll see how stimulative that is for demand. But we decided to move on and look for other places to mark because I think there will be other opportunities.
Yeah. I mean, you could easily make the case for $50 oil if I had to, with a lot of potential new. And by the way, OPEC has a virtual meeting on Wednesday. They've got their big in-person meeting December 1st. A lot of talk about, is there going to be a market share war? I think the market is, fair to say, it's nervous, Jason. The oil, energy, infrastructure, people are just like, we don't know where prices are going.
Yep.
Traders are net short bearish of the paper contract.
Yep.
People are out. They're just out.
Yeah. And you're even seeing what production, what the Saudis are doing, right? Yeah, so they're going to come back
Look, the fact that it hasn't rallied on this China news, whereas every other commodity has, tells you this is about OPEC. This is about OPEC.
Right.
And, the fact that they're abandoning, this, Brian, the fact that they're abandoning their $100 barrel price target.
They don't have a price target.
Okay.
Saudis don't have a price target.
You know what? You're right. The last official target was $20 to $25.
No, they don't. They do not have a target. I will say they do not have a target. But there's a lot of stuff in the FT and Reuters this couple days, and I'm hearing it. Trust me, from some of the OPEC nations, they're pinging me directly like we have no price target. But to your point is people are worried that if there's a market share war, we're going to get that $50 barrel.
The question is, has OPEC learned its lesson from literally 10 years ago? It was 10 years ago, November of 2014, that they said to heck with it. We're opening the spigots. We're going to try to drive the shale producers in the U.S. out of business. That didn't succeed. I don't know why they would try that again, especially when to balance their budgets at the national level. They generally need crude oil in the at least $60, more like $80 a barrel range.
And Kevin, I know you've got a point of view on energy, but this is my world. I'm going to look right in the camera. I'm going to say something because I talk to OPEC nations verbally, over text, WhatsApp, Signal, whatever. They're not going to defend a price target. I'm just going to look it right in the camera. There is no market share war coming. OPEC nations are not going to just fracture, at least as far as what I'm hearing. I'm just saying that. There's some other stuff in the media around it, but you heard it from me. I'll prove if I'm right or wrong. Anyway, Kevin, give us your view on energy in general.
Well, I'm going to use you as the source. I mean, I feel like that.
Don't do that.
Our thesis is the same. Now, I don't blame Jason for getting out of it. We've been trimming Chevron. We sold ConocoPhillips. We still have a small position in Chevron, a small position in Marathon Petroleum. We're getting a really nice dividend while we wait this out. We can write calls against it with any type of volatility, but our enthusiasm there has waned tremendously. But with our strategy, we're going to have an exposure there, but it's about as small as I can remember at the moment.
Yeah, I mean, it had its run. Energy.
Exxon's up 18% year to date.
I know it's had a good run. It's well outperformed Chevron too. They're different. Everybody always lumps them together. They're different companies. But
is it too early for final trades?
Are you giving us a preview, a little taste?
I might be trying to sneak in 2 for 1 here.
I kind of like that. We call you. I mean, I know Scott. They call you Farmer Jim. Maybe we should change that to Industrials Jim, because you're loving the industrials here.
Well, I am at the moment a cyclicals guy, and this is something I've been saying for quite some time. Probably people are tired of me saying this, but all those 3 infrastructure bills over the last 2.5 years are only just now starting to show up. You've got continued supply chain onshoring, and you know what? If you're building data centers, if you're building power plants, you need materials, you need energy, you need industrials in the form of earth-moving equipment, in the form of transportation like railroads. So to me, that has been a long-term thesis. One day it will end, but right now, that's going to continue into the next year.